Making tax digital, or MTD for short, will affect some landlords as well as some self-employed people. If you're in MTD, how you report your income and expenses to HMRC will change, and you might need to alter how you keep your records for your property business. In this video, we'll be looking at what MTD will mean for landlords, and we've made a separate video looking at the essentials of MTD for the self-employed too. There's a link to that video in the description. MTD will apply to landlords whose gross income from property is above a certain threshold. Gross income means your total rental income before you deduct any expenses, allowances, or tax payments. If you own rental properties jointly, you only need to count your share of the gross rent. If you're a landlord who is also self-employed, you'll need to add up your gross property income and your gross sole trade income when comparing them against the MTD threshold. Remember, we're looking at income here, not profit. The combined amount is called your qualifying income. You don't need to include any other sources of income like salary or pensions. There are 3 thresholds to remember which determine when landlords might need to comply with MTD. If your qualifying income is more than £50,000, you'll need to comply with MTD from April 2026. If your qualifying income is more than £30,000, MTD will affect you 1 year later, from April 2027, and if it's more than £20,000, you'll need to comply with MTD from April 2028. If you're already a landlord, you should be filing self-assessment returns. The qualifying income that will be taken into account when determining the point from when MTD will apply to you is that which is reported on the most recent tax return submitted before April 2026, April 2027 and April 2028. For instance, your tax return for the tax year ending 5th of April 2025 will need to be filed with HMRC by 31st of January 2026. If that tax return shows qualifying income of more than £50,000, you'll need to comply with MTD from April 2026. If you're in MTD, you'll have 3 key requirements to keep on top of: digital record keeping, quarterly updates, and a digital tax return. If you're in MTD, you'll need to keep digital records of the amount, category, and date of income and expenses relating to your property business in some form of software. That could be specialist all-in-one software, or a simple spreadsheet combined with special software which allows you to submit those records to HMRC every quarter and deal with a digital tax return. From your digital records, you'll have to submit a summary of your property income and expenses every quarter. This won't be as bad as doing 4 mini tax returns. Each quarterly update will just be a summary of the information in your digital records. If you can get used to keeping digital records when you receive rent or pay an expense, then the amount of work required for each quarterly submission should be relatively small. By default, the quarters will start on 6th of April, the date each tax year begins, and the deadline for submitting each quarterly update will be the 7th of the month after that quarter ends. So for example, the first quarter runs from 6th of April to the 5th of July, and that quarterly update will be due by 7th of August. The next quarter ends on 5th of October, and that quarterly update will need to be filed by the 7th of November, and so on. If it makes life easier, you'll be able to start your quarters from 1st of April each year instead. If you do, the submission deadline remains the same. If you're self-employed as well as a landlord, you'll need to file 1 set of quarterly updates for your sole trade and a separate set for your property business each quarter, making 8 quarterly updates in total for each year. Overseas properties are treated as a separate property business for tax purposes. So if you've got UK and overseas rental properties, you'll need to file 1 quarterly update for your UK properties and another for your overseas properties each time. After your final quarterly update has gone in, you'll then need to file a digital tax return. This will be similar to the current self-assessment tax return in that you'll need to declare any other sources of income, like employment income and any bank interest, and claim any reliefs or allowances you're entitled to. Under MTD, the tax return should be pre-populated with a lot more information than we're used to with the current tax return system. The property income and expenses from your quarterly updates will feed through, And a lot more data held by HMRC, such as pay-as-you-earn data for employments and pensions, should appear on the digital tax return ready for you to check. The tax return will be due by 31st of January after each tax year ends, just as we're used to under self-assessment. There won't be any change to the payment dates for tax due each year. Some landlords will be able to reduce the admin burden of MTD. For instance, if your rental income is less than £90,000, you won't have to break down your property income and expenses into categories. You can just report the total income and the total expenses each quarter. The only exception is that mortgage interest will still have to be reported separately. Another potential simplification is that if you've got income from jointly owned properties, you can choose to just report your share of income each quarter and leave reporting your share of expenses until you do your digital tax return. There's lots more detail on these simplification options and others in the ATT's frequently asked questions about MTD. You'll find a link in the description below. The ATT's Making Tax Digital FAQs are a one-stop shop for the essentials landlords need to know about MTD. You'll also find lots of useful information on gov.uk, including a quick questionnaire to help you understand if or when you might need to comply with MTD, and details of available exemptions. There are links to all these resources in the description. If you're struggling to get to grips with MTD, you might want to engage a tax advisor to take the pressure off you, or a bookkeeper to assist with record keeping. You can find ATT qualified professionals using our Find an ATT service. There's a link to that below too. One final thing to remember, if you're going to be an MTD, you'll need to register for it before the tax year when it first applies to you. HMRC won't do this for you, so don't forget to sign up before April in the relevant year. Keep an eye on our FAQ page for details of how to sign up.